So here's a puzzle for you. How does a single healthcare group manage to pull off explosive 70% revenue growth in one country, while at the same time, it's actually reducing the number of hospital beds in another? Well, today we are diving into the absolutely fascinating playbook of Narayana Hrudayalaya, a company that is frankly rewriting the rules for how you grow a global healthcare empire. At the very heart of all this are two strategies that seem like total opposites, but they're running them at the same time. On one hand, you've got this explosive growth playbook, building new stuff, launching new products, just grabbing market share. And on the other hand, you have what you could call surgical efficiency, squeezing every last drop of value out of the hospitals they already have without building anything new. So the big question is, how on earth do they do both at once?
All right, here's how we're going to break it all down. First, we'll look at their powerhouse strategy over in the Cayman Islands. Then, we're going to dissect their incredible efficiency engine back home in India. After that, we'll check out their big new bet on the UK, and then we'll wrap it all up with the key takeaways.
Okay, so our first stop is the Cayman Islands. And let me tell you, this market isn't just growing for them. It is absolutely exploding. It's really the perfect case study in how you build a dominant position and you do it fast. I mean, just look at that number, 70% revenue growth. That is not just some impressive stat on a slide, it's the result of a really powerful 1-2 punch that combines brand new infrastructure with creating their own captive audience.
Their strategy here was so simple but so powerful. First, they built the new capacity, a shiny new hospital that immediately led to a more than 50% jump in patient discharges. But then, and this is the brilliant part, they launched their own insurance product to fill all those new beds. It's a classic move, right? Create the supply and then go out and create the demand. And boy, is it working. I mean, this quote from the company's leadership says it all. The insurance product has been a massive hit. They're not just getting one patient at a time, they are literally winning over the biggest employers in the entire market. That locks in a huge, steady stream of revenue for them.
Now, let's just shift gears completely and head over to their home turf in India. Because here, the strategy is totally different. You could even say it's more complex. It is not about building more, it is all about getting smarter.
It kind of sounds like a riddle, doesn't it? Profits are going up, but the total number of hospital beds they operate in India has actually gone down since they became a public company. So what in the world is the secret?
It turns out the secret isn't just cramming more patients through the doors. They have fundamentally pivoted from a strategy of pure volume to one of high value. And that little shift has completely changed their entire profitability profile.
So here's the playbook, and it comes in 3 parts. First, they optimize their payer mix. Now that's just a fancy way of saying they focus on patients who have insurance that pays more, and just as important, pays on time. Second, they improve their case mix by specializing in really complex, high-margin procedures. And third, they use technology to become way more efficient, which lets them do more surgeries where patients can go home the same day. And they are absolutely going all in on this high-tech, high-value approach. You see a number like nearly 200 robotic cardiac surgeries in just 1 quarter? That is a massive signal that they're serious about this. It just boosts revenue per patient, and it makes every single bed they have that much more profitable.
Okay, now for their latest move, which is a huge acquisition over in the United Kingdom. By buying a company called Practice Plus, Narayana is basically placing its next big strategic bet on the future. So what exactly is Practice Plus? Well, it's a UK healthcare company with an incredibly stable business. A whopping 93% of its money comes from long-term contracts with the National Health Service, the NHS. That means their income is super predictable and secure. But here's the thing, Narayana didn't buy it for the stability. They bought it for the growth potential.
Just look at that chart. See that tiny little 7% sliver? That's the money they get from private paying patients. Now, in a market like the UK where private healthcare is a growing field, that small percentage isn't a weakness. It is a massive, flashing opportunity.
And the sheer scale of that opportunity is just huge. While Practice Plus is sitting at 7% private pay, its competitors are averaging over 30%. Some are as high as 75%. That's not just a gap. That's a giant, untapped market of higher-paying private patients that they can now go after.
But their plan is much bigger than just finding more private patients. It's about bringing in their secret weapon, technology. They are confident they can take all the lessons they learned about efficiency in India and Cayman and apply them to the UK operations to cut costs and boost margins across the entire business.
So let's just step back for a second and look at the whole picture. What is the core playbook here? Well, it's definitely not a one-size-fits-all approach. It's all about tailoring the strategy perfectly to the market you're in.
When you boil it all down, what you're really looking at is a three-pronged attack. In the Cayman Islands, it's all-out aggressive growth, fueled by new buildings and new products. In India, it's surgical efficiency, all about optimizing the mix of patients, procedures, and tech. And in the UK, it's a tech-driven turnaround, focused on slashing costs and capturing that high-value private market.
Narayana Hrudayalaya isn't really just a hospital operator anymore. They're blending healthcare delivery with insurance, with cutting-edge technology, and they're creating this incredibly powerful new kind of business model. And really, that leaves us with one final big question. Are we looking at the future of the entire global healthcare industry?